Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, June 3rd, 2022. Please don't forget to hit the like button, subscribe to this channel, and share this video with others. Only these actions are what keeps this channel going, so thank you again for hitting the like button. Today we have a relatively ambitious agenda. We'll look at stocks which have ran into resistance and already a given short signal. We'll see if the rally from the May lows has indeed exhausted itself. Junk that pulled back, so this is confirming the move for stocks, move back for stocks because they correlate highly. And interest rates are again approaching 52-week highs as bonds, treasury bonds sold off. We'll look at dollar, gold, and copper. Copper rallied this week, and still somewhat indecisive, but oil is pretty decisively approaching fresh 52-week highs. And Bitcoin, I'll show you which level to look for before it's going to collapse. Most likely it will. And I'll cover more stocks than I normally do. We have quite a bit of stocks to cover in the paid newsletter. If you are a subscriber, then stay tuned for a separate video. We're going to cover all of these various stocks. And if you are not yet a subscriber, then consider signing up by going to MasterChartsTrading.com, hit the sign up buttons, and sign up for one of the products. Specifically, let's look at the S&P 500, and on this chart I am showing the S&P 500 continuous futures, and it has also 4 of my lines. So you got green, blue, red, and yellow lines. You can see them on this chart. I'm gonna turn them off for a second, and you can see that there is nothing, and it's difficult to understand. If you put my indicators back on, it becomes more clear. So what's happening here? So number one, S&P 500, where I'm hovering on April 29th of this year, 2022, has closed below this yellow support resistance line. So when that happens, that implies a change of trend. So from here on, I'm thinking that we should be no longer buying, but we should be looking for an opportunity to sell short. Indeed, we got this opportunity, so the stocks dropped significantly into May and then rallied from here. So now we're approaching, we did indeed approach this red support resistance line. You can see it on this chart. It's currently at 41.82. So for now, we saw already at 2 attempts to rally above this red line, but so far both attempts have indeed failed. So we're looking at 31st of May, where I'm hovering. We saw a price come up above the red line and then close below it. So this is already a signal to sell short. We need to see a high above or a close above and then a close below. So the close below did occur, high above did occur. We have a signal. We had another signal today, so price again came up, touched the red support resistance line at 41.82, and then sold off. Basically this is what resistance is all about. We have, we had strong resistance. We're currently at strong resistance, and we used to be around weak resistance. Weak resistance was at 39.75, this yellow support resistance line. So you can see we just kind of blew right through it. It's not a very strong resistance. It does give some resistance, but not a lot. So we're currently, this is very important test. If we can break above this resistance at 41.82, there is a good chance we can actually continue higher to the bullish levels. And where are those bullish levels? So when I say bullish levels, it would imply that the stock, in this case S&P 500, has closed above the blue support resistance line, currently at 44.33, and that would mean that we are now in an uptrend. and we should be thinking about buying. So when or if that happens, we will again begin thinking about buying stocks. It hasn't yet happened. In fact, we're stalling at this red support resistance line. So my biggest hesitation right now, I mean, the signs are already there to sell short. My two other issues are, number one, that I'm not so certain that we have exhausted this rally. This rally seemed pretty strong from the May 20th lows. And then the other one I'll show you in a couple of minutes is that the NASDAQ and the Russell 2000 actually haven't even gotten to resistance. So I have a feeling we're going to continue higher, at least for a little while, and then maybe we'll roll over, but there's a good chance we can actually continue higher above the blue line. So there is now this indecision, there is now this suspense almost. We're waiting for which way the stocks will break. Dow Jones Industrial Average also gave two signals. So Dow Jones, S&P 500 give very high degree of correlation between one another. So this is Dow Jones futures, and you can see again strong resistance at the red line. So we closed above it, then closed below it. So we have a signal right there on 1st of June. Again, another one, another high above on the 3rd of June, and a close below. So we have two sell signals, two short signals. So Dow Jones and S&P 500 are already given short signals. I am still indecisive, somewhat indecisive once again, and I'm going to show you why. So here's NASDAQ, and NASDAQ, I mean, it did do the same thing. It bottomed right there on 20th of May. NASDAQ entered the bear market actually even earlier, here on March 8th, 2022. Had a huge rally and an enormously great, just wonderful, awesome opportunity to sell short right there on 8th of April. And if you sold it short, you got great gains there. So right now we're bouncing, and we're not yet, I mean, we did overcome the yellow support resistance line at 12375, but we haven't gotten to the bigger resistance. This is strong resistance at 13469, the red line. I'm reading it right off the chart. So I think there is a good chance that NASDAQ will rally, and if NASDAQ rallies, S&P will rally. So I am thinking that we're gonna rally a little higher, and then either roll over or continue higher. This is the best I can explain. I know it's sort of not very decisive, but there is a lot of hurry up and wait kind of scenarios in the trading. I heard the same thing that there is true about military. There's a lot of hurry up and wait kind of thing, and then all of a sudden there is action. So the same thing kind of happens to trading, is that you just sometimes wait for days, weeks for this opportunity, and then finally it shows up and you take the opportunity, hopefully. So at this point I'm again waiting to see what will happen basically at this point. I think NASDAQ has a little bit more upside, and by extension the S&P. The same goes for Russell. I mean, today's loss for Russell, we can look at S&P today on Friday, June 3rd. S&P lost 1.5%. Russell only lost 0.8%. And this candle, the Russell 2000 Small Caps Index, and this candle today is just not very bearish. So I am quite reluctant at this point to open a new short position. So again, with Russell, the same thing. I want to see if we can get a little bit higher to 1984 possibly. So that's about another 5% or so, and then see what happens if we're gonna roll over here or not. But overall, Russell is in a downtrend. It entered bear market where I'm hovering on January 18th. again, how do I know? It just closed below my yellow support resistance line, and that means bear market downtrend. And what we need to do is we need to look for opportunities to sell short. So a bounce, there is an opportunity to sell short on February 10th, and another couple of opportunities to sell short right there on 30th of March and again on 5th of April. So at this point we shall wait and see what happens. Looking at junk debt, so this is junk debt, J&K, or high yield bonds. Why do I care about high yield bonds? We can look at weekly chart, and here's the weekly chart. Notice this enormous candle from last week, and then to this week we were seeing significant selling. So maybe this whole thing is just, I mean, I'm pretty sure that this whole thing is an oversold bounce. So let's quickly look at junk debt on monthly charts, and down below here it's what's called correlation coefficient. So when correlation coefficient is in a positive territory, then stocks and junk debt move together in lockstep. By and large, junk debt and stocks move together in lockstep. Occasionally there is a negative correlation, you can see, but most of the time they move together. So knowing this, we can say that either junk debt will lead the stock market or stock market will lead the junk debt. In this case, junk debt has indeed led the stock market lower. Bear market for junk debt actually started on 18th of January, and it just never stopped. I mean, notice this huge move. Finally we got a bounce here in 18th, 19th May, bottom, and then a nice big rally. But this rally is not very impressive. It hasn't even gotten to the strong resistance, which is a red line. I'm reading it right off the chart at 100. At that point, if we get to that resistance, I think we should continue consider selling short. I mean, you probably don't want to short the junk debt because of the high dividend yield, but the principle is there. I mean, when or if we get to this level, I think junk debt will act in the same manner as stocks, and then we can see what the stocks are doing, and then we can decide if we even want to sell short stocks. At this point, the correlations are pretty high between stocks and junk debt, so I'm gonna trust both of them, junk and the stocks, and then we'll see if the where we're gonna get basically in the next few days, 2 weeks. Treasuries, so treasury bonds are in a downtrend. We had several opportunities to sell short. Latest one was like right there on 1st of March. Huge move, 20% move in your favor. Looks like it bottomed out on the 9th of May. Tried to get higher, but notice where it stalled at the resistance at the yellow line. So once again, these lines, you can find out more about them by going in the description of the video. So they're very easy to see where, at what price level to make a decision. So I want to do nothing at this point, and if or when the stock, in this case treasury bonds, get to the red line 128 in this point, I will consider selling it short. At this point I want to do nothing really. Just if you have a position, I would probably just sit in that position still. Now treasury bonds dropping implies interest rates are again rising. So here's a 20-year treasury bond yield, and we topped out right there at high of 3.826% on 11th of May, and right now we're at 3.3. So we pulled back from the highs for sure. But then again, like I just said, as the treasury bonds are dropping, the interest rates is rising. So we can see interest rates moving higher again. This is not good, obviously, for real estate and some of the other, consumer credit, for example. So it's definitely a headwind, and also a headwind for the stock market. So treasury bonds dropping, interest rates rising, not a great combination for the stock market at this point, at least. We'll see what happens. But yeah, so once again, real estate may come under pressure in the near term. Alright, switching gears, let's look at dollar index. So here's DXY, dollar currency index. This one is obviously bullish, or was, and I still think it's still bullish. So dollar broke out where I'm hovering on 12th of July last year. So we've been in a bull market for dollar for close to a year. Multiple opportunities to buy here as far as September of last year. Now we're potentially topping out. So we had a really big move. And it's possible that this high from 13th of May was indeed the high for the move. So now we're pulling back, but we did get down to this green support resistance line at 1027, and we kind of broke below it. So right now we're trying to recapture this area. You can see on 1st of June we tried to get up there, but we failed. Now there is still a good chance the dollar will pull back towards the blue support resistance line, which is at 99.9. Now if the dollar pulls back, gold and precious metals should benefit. So let's look at gold. Here is gold XAU USD. So as dollar was rising here into May, gold started to drop. But now, as the dollar seems to be pulling back, gold also started to rise. However, the biggest thing happened right there where I'm hovering on 12th of May, and that's already a entry into a bear market for gold. So bear market for gold is below 1825, and we did cross that line. So right now the bias, or what I'm thinking to do with gold, is bearish. So if somebody held a gun to my head and asked me, what do you want to do, buy it or sell it, I want to sell it right now. But once again, it will depend on the dollar. So if the dollar continues to pull back, it should definitely benefit gold, and vice versa. If dollar strengthens again and goes towards the records, I'm sure gold will come under pressure. And we already had a short signal on 12th of May. So if it rolls over and closes again below 1825, it would be a signal to me to consider selling short gold and gold miners as well. Right this instant, it's again somewhat indecisive. So this is one of those time periods when both stocks and gold are somewhat indecisive. So we've been trading less than normal lately. Here's copper futures. So big rally right there yesterday on 2nd of June. Now again, copper also has entered the bear market on 2nd of May right here where I'm hovering, by closing below this red support resistance line. But now we're again approaching bullish levels. So let's see what happens. I think the dollar will play a role in this. Generally speaking, copper appreciating in price is a good sign for the general economy, and stocks usually go up together with copper. I mean, we can look at correlations. They're not great, but let's just do it for interest's sake. So this is copper correlating to S&P 500. Not great correlations, but by and large, more or less positive. So when stocks go up, copper also goes up to a degree, not always. So looking at copper right now, bull market above 4.63, bear market below 4.36. And oil, crude oil. So we were long crude oil. You can see upward facing arrows, actual alerts. The target was reached recently, right there, 31st of May. So if you held your long position from March, we had opportunity in April, and we had opportunity here in May, and basically we reached our target, and now we need to move the stop to entry and then continue trailing higher. Now looking at oil on the longer term time frames, so this is a weekly chart. We're approaching 52-week highs, so that's high as 130 here. I think we'll break above, possibly go to 150. There is a good chance of that, unless something happens, but the chart is telling me that we're gonna go higher here. And wrapping up with Bitcoin, so since May till now, beginning of May till now, I've been saying the same thing. I think we can collapse from here. And it hasn't collapsed yet. So here's what's happening, I think. If we look at Bitcoin on a longer term time frame, like for example this is monthly, you can actually use my indicators on monthly. All you have to do is just change the length to 12. So again, if you want to do monthly, length is 12. If you want to do weekly, length is, I don't know why it's not working, but it's 52. You can kind of see it there. And if you want to do daily or shorter, that length is 250. Alright, so looking at monthly chart of Bitcoin, this low right here where I'm hovering from June of 2021, that low is exactly at 28800, so 28,800. So notice that we haven't actually closed below that level. And I keep saying the same thing, that we need to close below that level on at least a weekly basis. So we can look at weekly chart. So there's the same chart. And we're testing that support already for several weeks. For 4 weeks. Yeah. 1, 2, 3, 4 weeks. So this, I think this could be finally the charm this week. This candle just looks really terrible. However, Bitcoin is traded 24/7, so notice where I'm hovering, it says we still have 2 days left in this week. So Sunday night, we'll see what happens. Alright, that's it for this week's recap. Head over to MasterChartsTrading.com, click on sign up. Sign up for one of the products, so I have 4 packages. One is the trading indicators, so the indicators are these lines in the chart, and once again the green, blue, red, and yellow line. Again, you can tremendously simplify your trading by showing you what price levels to buy or to sell short. For example, here's Bitcoin short that yielded 45%. If you want a newsletter, so I cover daily. I have daily newsletter that I send out alerts about various securities that we trade, and I have a weekly alert or rather weekly email that I cover all of the stocks that I cover for the newsletters in the video. So stay tuned for that if you're a subscriber. If you want both of them, trading indicators and newsletters, I think it's a great deal, $59.95 per month. And once again, if you need more access to me, then you can get one-on-one 60-minute screen sharing session via Zoom once a month. That's $259 per month, but it includes all of the previous things like trading indicators and newsletters. Alright, that's it for this week's recap. Again, if you have any questions, please let me know. Thank you for watching and have another great trading week. Bye bye.